here at break, guys get it off easy, right? When girls who are in the wedding have all these bridesmaids, there's so much to do. And the guys typically, it's like you go golfing and drink beer and then show up and.
That's pretty much exactly what I did in my wedding. What time do you want me to be there? 4. Done. I'll be there at 4.
Perfect. Ryan Leopold is back with us from Cobalt Mortgage. And, Ryan, there are a lot of people out there trying to buy houses. There's people out there getting married. Hey, it's wedding season. But sometimes that bigger picture is such a huge thing to really keep in mind, isn't it?
I really think it is. I think you mentioned before interest rates play a big part of that. Now is a really unique time, but I think it's understanding the big picture is understanding the numbers and how they pencil out to your financial position, whether you're buying a first home or a second home or a move up buyer or whatever. I think just keep in perspective your financial situation, what your family goals and objectives are, and work around those. So I think that is a big part of it.
Well, let's get into then, because with the mortgage side of things, certainly there's no doubt that you're dealing with people's finances on a daily basis, what they can and can't afford. And, I wasn't saying necessarily go do something you can't afford.
Right.
But what I was getting at was, you can try to make things work out differently, right?
Mm-hmm.
You can still accomplish the goal. I think that's kind of what you're getting at.
Mm-hmm. I think the mortgage is such a big part of that. So the way I look at this is whether somebody's looking to buy in the next 30 days or the next 12 months, and they're not going to buy the property in cash, which is rare for someone to buy in cash these days. Well, some properties are, but most move-up buyers or first-time home buyers are financing the property. I think they need to understand how the numbers work. And at the end of the day, what most buyers want to get to is how much house can I buy? How much is it going to be out of pocket? And what are my payments going to be? And so if you look at any kind of market, whether the properties that are available out there or where the interest rates are, it's all about formulating a plan and then sticking to that plan and going out in the marketplace and finding a home that's going to meet your financial objectives and kind of get that ceiling, knowing I can be approved for this. And if you talk to a mortgage professional and they go deeper into the consultation, they're going to give you an idea of what you can be approved for. And then let's work our way down to a level you feel comfortable with and don't go over that number. Don't be looking at homes that are above what you're comfortable with because you're always, most cases you're going to like the home is better.
Well, that's why they're more expensive, right?
That's why they're more expensive. So, coming up with that plan and that strategy ahead of time before you're out there actually looking at homes, as I think can be the best way to go about it. So that way you're efficiently going through the process.
Well, you talk about this now versus 12 months and going through the process. When you look at where interest rates are now, you look at where prices may be going, those are two really big pieces of the puzzle that can change. What advice do you have for somebody who maybe is like, okay, now's the time versus 12 months? How does somebody effectively gauge when they should be buying?
Yeah, I think it's a little bit of both. I think one, like I said at the beginning, it's understanding the numbers, understanding your financial position and financial objectives, and just see kind of how you fall into play. How much house can I buy? How much is it going to be required out of pocket? And what does that look like in monthly payments? Because that's going to determine, okay, if I bought today, this is what I can accomplish. But a buyer needs to decide, are they a buyer in the next 1 to 3 months? Or are they more long-term? So either way, I think it's important to get with a lender and formulate a plan for a couple different reasons. One, if there's any errors that come up, maybe there's errors on the credit report that 40 to 50% of credit reports have some kind of errors on them, or there's things that need to be fixed. Maybe you need to pay off a collection, pay down a debt, something that's going to maybe increase your credit score because that's a big component of interest rates and cost. So once they kind of get that idea out there, and then we hear too many buyers say, well, I'm not really ready to buy until next year, but if that great property comes up, I'm ready to take action. So I think they need to really get a clear idea of what that means. So if they're thinking that if a great property comes up, then they need to be organized with their finances and ready to go from day one.
It's kind of like the single guy, right, who says, I'm not going to get married. And then the girl comes, and next thing you know, like, oh, I'm engaged. It's kind of that same thing.
So let's keep it on the wedding analogies today?
That's what I do, man. I just weave
the dry cleaning analogy of last week?
Yeah, this is wedding analogy day.
I like it. All right. So,
that makes, it makes sense.
Totally makes sense.
And when you're, sometimes if you're just, you're out looking, if you're dating or whatnot, or just perusing houses, you're going to find something you like enough to commit to it.
Yeah, and if you're in a competitive market like we're in today, and there's not a lot of inventory out there, and when the great properties go fast, and you don't have your ducks in a row on the financing side, but you are kind of lukewarm that you were going to buy in the next 3 months and you were really focused on January, and now that perfect property comes up and you need to make an offer today, you're not going to be in a position to do so because you don't really have a plan in place. So I tell everybody to really get their ducks in a row, meet with a lender and get that consultation down so they know exactly how everything pencils out. They know what they need to do to be ready to go, and they're ready in case the right property comes up, as opposed to being reactionary.
Yeah, we're here with Ryan Leopold of Cobalt Mortgage. Ryan, so I want to hit on then two things, because you talk about getting your ducks in a row, being prepared, and then the one thing you have to, I guess, prepare for is the change in interest rates, because you do have fluctuations, and sometimes as prepared as you think you may be, that preparedness doesn't really result in the exact same thing you'd hoped. And that could be tomorrow, that could be in a week, that could be in a month, 6 months, whatever. I mean, rates change, house prices change.
And I think a lot of people take for granted and sometimes don't realize how low interest rates really are in the perspective of history and what interest rates have been for the last 50 years. And if you look at it, that interest rates on the 30-year fixed are in the mid to high threes, and they've creeped up a little bit over the last couple of weeks. But historically, that's pretty much the lowest they've ever been. And you think that the average over the last 50 years is maybe 7 to 7.5%. And that's a normal, healthy economy, is having interest rates for mortgages in the 6 to 7% range. So if you look at that and say, well, I'm going to wait 6 to 12 months because I just don't like the inventory of properties that are out there, or I may just not be ready, you need to make that conscious decision based on understanding the facts of the market that we're in compared to where the market could be, because you're going to price yourself out based on simply by interest rate. Priced out simply by interest rate. So if
let alone rising house prices.
So yeah, you have rising house prices with the demand that's out there. And if you see rising home prices and consumer confidence go up, interest rates will go up. We know they're not going to be this low forever. So you're going to really price yourself out from, being in the 4% range. And, if it goes to 5.25% or 6.25%, that really changes your payments quite a bit. And if that changes your payments and that was the max you're comfortable with, now it's going to affect your purchase ability by, 50 to 100,000, depending on the home that you're looking at.
Yeah. I mean, and then all of a sudden you talked about not going over a number at say to 300,000. Well, when you start having to dwindle that number down again, that starts putting you in a predicament.
It really does. And I think, again, like I said, most buyers do not really comprehend how low rates are and what that really means to the rest of their financial position. So again, I think that consultation with a good lender and sitting down and understanding not only the entire process and being organized and structured and prepared, but understanding what rising interest rates could and will mean to their ability to purchase that home they want.
Yeah. Well, Ryan, it's important, especially as rates are fluctuating. I mean, that becomes such a huge barrier, I think, to people being comfortable. I mean, not only do they see, if you're a buyer, not only do you have to deal with, gosh, can I get this house? Can I get that house? Well, how many offers are on this one? Now you have to also couple that with, well, now I heard interest rates are going up. I mean, the stress of that for people. I mean, you really have to have somebody in your corner who can explain, okay, it's not the end of the world. There's still ways we can get your payment to where you want. There's still ways to get the house you want. But that's where it comes, like seizing the opportunity. If you find the house you want, you have to be prepared to go out and make an offer, or else, well, to stick with my analogy, somebody else may be proposing to it.
It's absolutely true.
Well, thanks for joining us, Ryan. We'll be right back. Rosie Rourke's going to join us next. We're going to keep talking about this buyer's market, and who knows, maybe I'll throw some more wedding analogies in there. You're listening to Brash and Ahmed.